JP Morgan Chase CEO Jamie Dimon has warned that President Trump's plan to cap credit card interest rates at 10% could be an economic disaster. While speaking at the World Economic Forum in Davos, Dimon said that the move could remove credit access for 80% of Americans, affecting everything from utility bills to school fees. He emphasized that while banks would survive, everyday consumers and businesses could face serious disruption.
It would be an economic disaster. And I'm not making up because our business, we would survive it, by the way. In the worst case, you have to have a drastic reduction of the credit card business. I mean drastic. I mean like 10%. I mean like 80%. It would remove credit from 80% of Americans, and that is their backup credit. And the people crying the most won't be the credit card companies. It'll be the restaurants, the retailers, the travel companies, the schools, the municipalities, because people will miss their water payments, their this payment and that payment.
Now, Trump has reiterated his call, asking Congress to approve the cap for 1 year. According to him, high credit card debt is a barrier to saving for a down payment. Banking leaders have pushed back, warning that the cap would limit access to credit for millions and hurt broader economic activity. Wall Street analysts say that legislative approval is unlikely, and some banks are exploring alternatives. The rate cap proposal adds to growing friction between Trump and Dimon. The president has previously accused JP Morgan of debanking, which the bank, of course, denies. Trump has threatened to sue JP Morgan over this in the next 2 weeks. It is important to note that the total assets under JP Morgan stand at $4 trillion, nearly the size of India's economy. Now, coming to the debate on the credit card cap, both sides are keeping a close eye on Congress, as any action could set a precedent for U.S. banking policy.